China's wobbly economic recovery just got a little more uncertain. Figures out Friday showed growth falling to its slowest pace since early last year. The world's second largest economy grew 4.6% over July to September, a little better than forecast, but still down on the previous quarter. Property remains among the big problems. The real estate sector has been in crisis for years, with big developers weighed down by debts and struggling to complete apartments. Other numbers out Friday showed home prices falling at their fastest pace since 2015. Policymakers have announced a series of stimulus measures in response.
是年底前将白名单项目的信贷规模
The latest came a day earlier, with promises of more support for the property sector. But many investors say China's focus on boosting infrastructure and manufacturing is no longer enough. They want to see measures to stimulate consumption and warn the country will struggle to hit this year's 5% growth target without major action. Speaking to Reuters on Thursday, International Monetary Fund Chief Kristalina Georgieva added to calls for change.
We did some analysis on what would happen if China undertakes structural reforms. Well, that can lift up China's medium-term growth quite significantly. Otherwise, they risk to fall below 4%. And that is going to be very difficult for China. It's going to be very difficult also from a social standpoint.
Last week, China's finance minister promised to significantly increase debt to help drive growth. But he left investors guessing on the size and detail of any new package. Local media reports later claimed that Beijing would raise around $850 billion through new bonds to fund fiscal stimulus. China's blue-chip stock index initially fell following Friday's numbers, but later reversed course to gain over 3%. The jump came after the country's central bank launched two schemes to pump money into equities. It said that was meant to aid the steady development of capital markets.